TradingView live.
The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 9th day of March, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry. Point any internet-connected browser to CFRN.net/live, and there you will find a live, real-time simulcast of the show as it unfolds, soon to be brought to you by the good folks at TradingView. Thanks, TradingView. Now, also, as you know, we're streaming the show live every day on our YouTube channel, CFRN, on our Facebook page, and also on Twitter. And we're very excited to be adding TradingView as a platform. We are streaming live right now on the TradingView platform. I did a test run yesterday afternoon. And then I had a discussion with management this morning, and let me just do what I always do. Just tell you how the conversation went. Okay. Management, as you know, throughout the show, we go from our charts, our DT Pro charts, to TradingView charts, back to the DT Pro, back, of course, to TradingView. TradingView we've always used specifically for equities, but so very much of what we do is futures, and I have not yet completed my task of converting all of our indicators and everything that we do over to the TradingView platform. Management, Pierce, and again, thanks to everyone at TradingView who has, played a role in helping us bring the show live to the TradingView audience. But we have a little hitch in the giddy up in that since we're streaming on the TradingView platform, it has been requested that we only use TradingView charts. And you know what? That makes absolute, perfect, 100% sense to me. I completely understand. So, because I did the test broadcast yesterday and told everyone that you could look for the show on TradingView today in its normal time slot, 12 to 2 p.m. Eastern, I'm going to end the TradingView portion of the broadcast here momentarily. I don't know that I can put it on pause when I go to the other charts, but anyway, I don't want to in any way be disrespectful to the good folks at TradingView who have made us a part of this new initiative. I understand their reasoning, and so I'll be working, very hard in the background when I'm not doing other stuff to get the indicators converted, to get myself really a little more familiar with the TradingView platform. And I've been on the DT Pro platform since, goodness, 2008. The reason we use that particular platform is a few reasons. One, it's very simple and easy to learn. Our strategy and methodology doesn't require a lot of bells and whistles. And so when we're training someone brand new who has never dealt with charts and has never traded before, it's just a really great entry-level type of charting platform. TradingView is at the other end of the spectrum. I don't know if there's a bell or a whistle available that you can't find on the TradingView platform. So what I have to do is I have to get myself, Michael, CFRN, we got to get ourselves up to speed and running in the manner that we should be. Okay? So, I did want to pop on to the TradingView platform. Now, the show's streaming live, all the places I talked about. But until I can get my charts situated properly and perfectly for... now, John just called me. I assume he's ready to come on right now. We could use the TradingView platform to take a look at the different equities. The normal format is...
John's not in yet.
Oh, he just rang me. Okay.
But keep going. I'm sorry. I didn't mean to interrupt you.
No. I'm glad
Your
you told me,
mojo.
because what I was going to say is I was going to ask you if you plan to hang around. We could talk to John. We could show the TradingView charts for the equities, and then I could end the TradingView portion of the broadcast, and we could do all of our other stuff on our DT Pro platform. But if he's not logged in yet, I don't want to make it complicated, and you probably got things
He actually
to do.
just popped in. But my part's going to be really fast today.
Okay.
I mean, I want to watch the TradingView part with John. John just popped in, so you know what? Let's just go to John, and then I'll go after.
Are you sure?
Yeah.
Because
yeah,
I don't want to hang you up. And
No.
All right. So
No,
so here's what we're going to do, folks. We're gonna go to John right now. We're going to take a look at the equities and some of the indices. I also mentioned to management at TradingView that while I have the live data feeds for much of what we trade, there's still a couple that we don't have, like real time on Crude, a few other things. So as soon as John and I finish talking, that's when I'll end the TradingView part of the daily broadcast. But then we will do as we normally do. Michael will give us a recap of what happened in the live training room. I will, of course, go through each and every one of the Concierge Trade Alerts from last night. I'll go through all of the Logic 247. But for now, and thank you very much for that, Michael, let's go ahead and go to John and get his take on the markets and on the world. So, John, I don't know how much of all that you heard, But because we are streaming live on the TradingView platform now, we're only to use the TradingView charts, which are the ones that I use when you typically come on. So
Okay.
we're going to figure out how to work it all out. But just, again, welcome to the show. Glad to have you here. And whatever chart you want me to take you to, I'll be happy to bring it up and we'll give a talk.
Great. Well, thank you to TradingView for putting us on.
Yeah, they've been very gracious, and I completely understand their request that we just, if we're going to broadcast on their platform, because they looked at some of our previous shows and they said, hey, love the show. We'd just love to see, the whole show on the TradingView charts. And so I'm going to have to do some work on my end to make that happen because I want to honor that request. So where would you like to start out? Here's the S&P 30-minute, but you just tell me where you want to go.
Look, the Fed came through today with probably a larger than expected cut. The market's always disappointed because they were probably looking for 0.75 of a point after what happened yesterday. There's not much to complain about if you get an all-time record rebound.
Well, on the daily, from this swing high to the swing low, we ran up, and I published this last night in the Telegram channel, that we were waiting for price to make it up to the 50% reverse fib so that we could then look for shorting opportunities, because I think the market's going to hand us another leg to the downside. Now, I said that in the Telegram channel last night before we knew that there would be this rate cut today. So,
yeah, I think, the VIX is going higher today. You might want to put the VIX up, the UVXY.
The UVXY?
Yeah. And what's interesting about this is, it is a volatility index. Mm-hmm. So, the pullback in the VIX is minimal compared to the massive move we had yesterday. If this move up was potentially a major bottom, the VIX should be lower today. Should be a red candle, not a green candle. So that is a bit of a warning sign. Because we could really blast higher towards 30, get into the 30s or 40s, and obviously that would mean giving back everything we made yesterday and probably making new lows. So it's a little, the day's not over yet. I think it was a little bit of buy the rumor, sell the fact with the sell-off that we're seeing at the moment. And after a record day, just to help folks out there, when you have these little pullbacks during the night, this was, by the way, this was an all-time record volume day yesterday in the history of the market. It was almost $1 trillion, I think. So during the night we had a few pullbacks, and every one of those pullbacks was really a buy. There was a good trade on the upside, and the sells as well were tradable, because we're these are not normal kind of after hours type things.
And that's another thing, John, that I wrote about last night, that the markets are so volatile right now that whatever your normal trading methodology, trading strategy is, you've really got two options. You can greatly increase the amount of risk that you would normally assign to a trade, or you can be patient and let the markets get back to their plain vanilla leg retrace, speaking that language that we all speak, so very well.
Pretty much what I was doing today.
You kind of have to.
In the first 7 minutes, I made my goal, and then I made a bunch on the ES in the first half hour. I did everything I needed to do, and then the markets just went nuts. And in the small time frame that I'm in, it's just untradeable. It's
exactly.
Yeah, and you can blink your eyes and the Nasdaq can jump 500 points, 1,000 points, just like that.
I normally do this part, John, right before you pop on. Let me do this just real quick to kind of give everyone an idea of where we stand globally. These are the cash markets, the indices from around the world, but we'll start here in the U.S. Currently, the Dow is down 307 points. That's a little over 1%. Nasdaq is down 69. S&P 500 is down 25. The Russell 2000 is down 2.5. In the commodity basket, crude oil is up 80 cents, trading 47.55 last. Now that's a gain of 1.75%. Gold up $46.60, trading 16.4140 last. That's a gain of almost 3%. In the Asian markets at the close, the Nikkei posted a loss of 261 points. That's a drop of a little over 1.25%. Shanghai added 22 points, and the Hang Seng dropped 7. And in the European markets at the close, FTSE up 63, that's 1%. DAX up 127, that's 1%. And the CAC up 59, that also is a gain of a little over 1%. So that gave us a mixed day in Asia. Go ahead.
I just want to say, if you were to look at, we're down 300 and something today on the
ES.
On the ES, what kind of retracement?
Oh, you
is
mean
that?
on the ES? We're down like 25. The Dow, we're down 300.
The Dow. I'm sorry, the Dow. What kind of retracement is that?
Well, let's
compared
just
to yesterday. It's like a
let's just take a look.
30% retracement, something like that.
Okay, here's the March contract.
Yeah.
And this is one of the data feeds where I'm still on a slight delay. On the S&P, I know we tagged a 50% fib retracement. And I've still got things to learn my way around this TradingView platform, because I've not used it in the past to draw fibs. I've always done that on the other. But we'll get it in line and we'll get it up to speed. And here's fib retracements.
There you go. There you go.
Yeah. First time out of the gate with the fibs on the TradingView platform. And I guess I need to click it to seal it.
Okay, on the Dow. Okay, yeah, 62%.
So there's the
That's
Dow.
perfect.
Boom, right there. 50% fib retracement right there.
Yep.
Almost
perfect.
to
And
the tick.
Set up right now. I think it's set up right now to go higher. As ugly as it looks right now. That's what I think.
Well, I think you're probably right, because look, a record up day is a big deal. I think almost if you go back and look at every record up day was followed by some follow through to the upside. Secondly, we talked about this a while back before this crash ever happened. If you remember, we said in an election year, there tends to be a kind of a downturn that comes out of nowhere, usually some kind of exogenous event. Sometimes it can be a third-party candidate, maybe Bloomberg, maybe Sanders. I think Sanders' win had a lot to do with this sell-off too, was part of it. So it was kind of several forces all acting at the same time, including the virus. And so, that's why it was such a brutal sell-off. But 9 times out of 10, and remember, this may be the time it doesn't happen, but in the previous elections, the market has bounced back pretty smartly and actually gone higher. So there is the prospect of that happening, because we outlined this last week, and we said, this thing could make a kind of a head and shoulders reversal, which it effectively did. And, we have to, right now, we might be making the right shoulder and then pull back a bit and then start going higher. And that could be very, very bullish if that happens, especially the way Apple went yesterday. We might get another late rally today, I think the intervention, while it might have, because of the Fed's action today, the intervention may have, what's the word, kind of just taken a rest, if you like. Incidentally, there's a report out yesterday that another factor in this decline was apparently the Fed had been pulling money out of the system here in the last couple of months. So they, kind of created this problem potentially, enhanced this sell-off by doing that. May have done something to the gold as well. Today, thanks to the Fed's rate cut, the dollar, let me just pull it up.
Here, we're going to pull up, all right, I'll pull up the dollar. You want it on a daily, John?
Say again, sorry?
The dollar, would you like that?
Yeah, on a daily, yeah, look at that.
Okay.
Wow.
Yeah, so I mean, we're back to support. So
Well,
what happens here is critical.
96.50, actually, if you put the daily and even the weekly up, because I think you're going to see a massive sell signal, the weekly, the daily.
Okay, here's weekly.
Right. So you got a double top there. Kind of does,
Talking about
kind
right
of
here?
looks like, yeah. So, we could really break down hard here in the next few days. And jeepers, gold's up $52 right now after being down like, a huge amount last week. It's really, it's probably anticipating that the dollar is going to get weaker.
Let's look at gold on a 30-minute here for just a second.
Yeah, look at that. That's just incredible, the way this is going higher. So
last night, our alert that went out to all of our traders, and anyone that would like to grab a screenshot real quick, you can do that. They got out at 6:10 p.m. Eastern. Concierge, that's our static report that comes out shortly after the Globex open each evening. Instructions were to consider being long. 3110 for the S&P. And so
I think we actually said.
oh wait,
yesterday,
I wanted to show gold. I'm sorry.
Yeah.
Every CFRN trader in the private Telegram channel received this. Let's see if I can draw a straight line here at 1606. I'll draw it across there, and then I'll drag it down. All right. So there's 1606. We knew we had an obstacle overhead at 1610. Our next weekly trading zone overhead, we have a weekly trading zone at 1600 /01. The next zone overhead, John, is 1649 /50. So I would expect, this has been a beautiful move up. This is again 30-minute on gold, but to all of our traders still long this position, you should consider tightening your stops, taking your profits, beginning to scale out, because 1649 /50, as we tick up that way, we expect that to be good resistance. So
yeah. So if you can go squeeze up the data on that a little bit, so you can see
you want to go to like a daily, or
maybe a 2 hour.
2 hour?
2 hours. Yeah.
2 hour.
Yeah, this is super dynamic now because we're, I actually said this was like a three-way pullback. Now we're potentially in a new bull up phase here, and this is a little bit like, February, mid-February of 2016, the gold stocks took off and had the biggest move in 30 years. They rallied all the way into August. We could be looking at something similar right now. This could be the beginning of a trip up to 1750, 1850, maybe even up to 2100 from here. And actually, if you can go to the daily now, or maybe go to a what are we on, a 2 hour?
Right, 2 hour.
Yeah, let's have a look at the 4 hour. Yeah, you see that big buying, that's probably one of the biggest buying spikes you'll ever see, the way this thing went down just at the end of February, and how it ran up, pulled back, and now it's sort of super dynamic.
Leg, retracement,
this thing
and
could,
continuation.
yeah. So go to the daily now. So we have that doji there in the middle, but basically we've taken back everything that we lost a couple of days ago. And boy, you know, moves like this can turn into really, really, really big deals. We're now looking at the weekly.
Okay. Right.
So, I mean, this is extraordinary too. Now we've obviously got to get through this spike up above us. We're probably at a level where we might, well, just right now we're going up $1 a minute, the rate we're going, but that's, you know, the last 5 minutes we've gone up about $5. So just widen that out a bit, Dwayne. Looks like it wants to go up to 1800.
Do you want to tighten it or widen it?
I widen it, I think, yeah.
Like so?
Yeah, and let's go, is that...
that's weekly.
Okay, let's go to a monthly now. Okay, so, you know, we had this sort of doji here. Now, I mean, look, the odds are kind of increasingly high. We're going to just blast through this spike.
1700 gets taken out, and that $100 up day in gold that you've talked about for so long, I mean, there it sits at 1800 once we break. Once we
and
break
look,
through
the
that
rate of
swing high.
ascent is sort of similar to 2010. Think about that. Hang on a second.
Well, I mean, we just put in a new high here on the day too, at 1650.4. Well,
So
25.
we are at the high of the day.
Yeah,
Okay.
we're trading right at the high of the day right now.
All right. And on the ES.
So actually, we just pulled back from the high of the day. Okay, on my time frame in my world, we're pulling back right now, and it's selling off the high of the day. But I think what it's going to look like is it's going to give us a short opportunity on the small time frame, and then it's going to turn around and go right back up. That's what I think is going to happen. We needed to do a cycle reset, and it's basically doing that right now.
Last night's alert on the S&P, just to be long, 3110. Yeah, that's right there. And looks like swing high for the session, 3137. So well, that's $2,700. No. I'm on the S&P now. So from 3110 to 3137, that's 20. Alexa, 27 times 50.
27 times 50 is 1,350.
Okay, so that little spike there, that was a $1,300 per contract move for the S&P at $50 a point. What time did that announcement come out this morning? Obviously, it was in this candle.
It came out a little bit after 10, I think.
Yeah, we get in the right time zone. East Coast, there we go. So, yeah, along with indicators and whatnot, I'm going to have to get myself more familiar with the TradingView platform overall so that I can just do all the stuff I normally do without, you know, stumbling and fumbling. But we've used the other platform for so long, it's become, and you know, anytime you change platforms, it's like
it's a big deal.
It's a major life event. It's right up there with birth and marriage, divorce, and even death.
Yeah, birth, marriage, divorce again, divorce again.
Yeah. So that was the number to the upside on the S&P. On the Dow, and are we rolling this week?
No, next week. Actually, we're gonna roll. Hang on, I'm gonna roll on. Yeah, probably on the 13th. We're gonna roll. Not this week. Next week.
Last night's alert on the Dow,
The new
Concierge
contract.
26740. Go ahead. What were you
Okay,
saying?
I was going to say the new contract becomes available on the second Thursday of the month, and it's usually the day after that we roll.
So 26740, right about here. Now, important prices, important areas are almost always tested. And that's in normal markets. That's when things are what I call plain vanilla. And this is anything but a plain vanilla market, which is why you either have to greatly widen your stops, embrace a lot more risk, or be patient and allow the market to return to plain vanilla status, where the rhythm is recognizable, where you can look at any chart, any market, any time frame, and know exactly what the next high probability move is going to be. Now, any websites, of course, give you the impression that somehow they've figured it all out, connected every dot, and they can now tell the future. Unfortunately, that's just not true. Because that's not how God created the universe. He put a lot of stuff into Adam, but the ability to change the past or to know the future was not in the list of ingredients. And those two things, the inability to change the past and to know the future, they're inextricably linked for eternity. Now, if you can't know what's going to happen next, what you can know is what the next high probability move is. And with our methodology and with our strategy, you're able to position yourself on the right side of the market. On the right side of the market. In other words, if the market's dropping, you want to be looking for short positions. If the market's climbing, you want to be looking, obviously, for long positions. And what our indicators do, and you'll see them here in the very near future on TradingView, they go in no matter what time frame, no matter what market that we apply them to. Their job is simply this. And we are indicator light. We're not heavy on indicators. Once upon a time we were. There was a point in time when Michael and I had every indicator, oscillator that anyone had ever created and put up for sale. We had all the stuff we created ourselves. I mean, we had a lot going on. Unfortunately, we realized after a while that we were not doing ourselves any favor. And so we painfully began to peel away everything that did not contribute to the bottom line. And so now we have basically three indicators on the chart. And the goal of the indicator, when it's applied to any market, any time frame, is to immediately go in, find the underlying rhythm of that market and that time frame, highlight it, and then show you where the high probability, low risk entry is. John, you back?
Yeah.
Okay. Yeah. What markets you want to look at now?
Right. So yeah, we're turning a little bit here, and this might be the beginning of a bit of a rebound.
On the gold? I mean, gold just bounced off the high of the day and dropped.
Yeah, I think the gold might pull back a little bit here, and
dropped about
the market
$5.
might pick up somewhere down in this range, before the day is out. But
we've got a weekly trading zone right below us, John. We're sitting at 30.51.75. The zone below us right now is 30.33/30.34.
Yeah, getting back over 3,000 is quite impressive. But we don't want to really go below it again. That would be bad. And get 9,000 on the. Can you put the Nasdaq up for a second? 9,000 is a big number. So that's potentially a little bit bearish because, when the Dow when the Dow got in a bear market, sort of went up to 14,000 and in 2007, and then started taking out the milestones on the way down, 13,000, 12,000, 10, 11, things like 11, 10. Each time it sort of broke through a big number, it would go down and then it would come back up and test it, and then it would go down again. So, conceivably that is what could be happening here. And if you look at the Dow, if we can go to the Dow for a minute.
Sure. I was just going to point out the weekly trading zone where the market has found support is 87.25/26. So again, weekly trading zone doing exactly what the weekly trading zone is supposed to do.
Here we go. It's picking up a little bit now. We get a little bit more confidence in this market.
Right.
So
which market did you ask me to go to?
I mean, look. Also, we were up $25 on Apple yesterday, which is incredible. Maybe more even. I think.
There's Apple in 30-minute.
And there's a kind of a flag formation there, which potentially could break out to the upside.
Right.
It got up and tested that gap. So, if it's able to get up and sort of close that gap or get near that 310 level, that would be impressive. If you could look at the Dow for a minute.
Oh, the Dow, yeah, got it. There we go.
That spike there is a bit of a problem, and some of the components of the Dow are the cruise lines and the Disney and United Airlines and things like that are pretty some of these big components are negative for one reason or another. FedEx, another one, I think. So
now the swing low of this candle I'm on right here now, John. This big red candle that came down.
Yeah.
The swing lows 26069. Our weekly trading zone there is at 26070/6075.
Yeah.
So we overshot the zone by one tick, and now in the other direction, the zone overhead, we've got 550 points to run to the upside.
Yeah, if you can squeeze up the
You want a different time frame? Or you want me to squeeze it up?
see more, yeah. You see how we came down. You see how we tested some of these numbers on the way down. Like we broke, and then tried to test, and then broke, and things. It's not really to the number, but there were some rallies where we tried to sort of rally and then gave it all up. We've got a kind of a head and shoulders developing here. So if we can hold in this right hand shoulder range and break above it, start working above it. And I meant to say that the global intervention that's potentially going on. The Fed emphasized that it's talking to all the central banks. So what you could be seeing, or what we probably actually already saw since Friday, is around the clock, at night, when the market opens at night, China's doing the intervention, and then maybe later, Australia, and then India maybe, and then going into Europe, and then Europe takes over, and then it comes back to the US. That could go on for a while, something like that. So, and then that could definitely give the market some further lift. If it fits with this picture of the election year crash, mini crash scenario, and we recover from this, that could be quite significant. Now, look, taking the numbers that China, the official numbers, we're the global situation right now is about 93,000 infected cases, and nearly 50,000 recovered. I think it's about 48,000 something recovered right now. So we're nearly at 50,000 recovered. So really the net cases are actually like 40,000, a little bit more than 40,000, although accelerating quite sharply in the Korea, Italy, Iran, those sorts of countries at the moment. So that's the big unknown as to how bad it's going to get in those countries and some of the other ones, including the US or the UK. So that's what we're kind of, but if this thing in any way slows, it could be very positive. Listen, I better
All right,
run,
John.
but thanks for the...
All right,
okay,
thanks so
bye-bye.
much. Okay.
Okay.
Okay, guys,
Yeah.
at this point, we're going to end the Trading View portion of the programming, so I'll be able to go back to the other platform and point out some things to you that transpired. Again, we want to thank all the good folks at Trading View for inviting us to be a part of their new streaming platform. And as we get our indicators indicating, and I become just a little more familiar with the Trading View platform, because it's I've been using it now for quite some time. And as you go around the internet and visit different websites, if it seems like a lot of the charts out there, no matter what site you go to, kind of look the same, and I'm talking browser-based HTML5 charts, well, you can thank TradingView for that. I'm amazed. Many of the big names out there, when you go, you're looking at TradingView. It may say it, it may not. Yeah, go ahead.
I was going to say the thing that I like about TradingView is get equities and futures.
Exactly.
And we haven't gotten down to the bottom, but yeah, you could probably do options and other things as well.
Our methodology, as we say, is fluid across all markets and all time frames. Now, before I close out just the TradingView portion of the show, we'll continue with the program until we're done. Michael's going to do the recap of the live training room. If you would like to take a free trial with us, it's very simple. Go to eminitrainingschool.com. That's Emini Training School. And Michael will cover this, but
I will. Oops. Paper.
eminitrainingschool.com. When you get there, very simple. Trading's not easy, but it can be simple. For 1 week, we'll show you how simple it really can be. You'll find everything a trader needs under one roof, one low price. No more guesswork. Bulls or bears, our indicators clearly display who has control. It's just kind of drop dead simple. We only use them, remember, a couple of indicators. They're color-coded for your convenience. So when you've got blue and climbing, well, it's probably a good idea to be long. The indicators will help you find that entry that gives you the greatest opportunity with the least amount of risk. We do offer unlimited private one-on-one mentoring to all of our partners. You can even book one free mentoring session during your free trial. Our Logic 247, which I showed you the Concierge Trade Alerts. Let me just show you what the logic looks like. This comes to our traders through our private Telegram channel. Last week, which was week 82, we had 28 total alerts issued. 3 of them never triggered. 2 of them were stopped out. So 8% of actionable alerts last week were stopped out. We're now in week 83, which for us begins Sunday night at 6 p.m. Eastern, when the global markets open, the Globex session it's called. When you see now these come out live in real time. The Concierge that we looked at a moment ago, the Concierge is a static report issued once per session, but the numbers are good for the entire session, and we do anticipate those numbers to be tested and retested. So Sunday night, we were originally looking to buy the S&P, buy the Dow, buy the Russell. Again, the thumbs up means we achieved the target. When you see Z's, that means it just didn't trigger. That was crude. That was gold. And as we roll into Monday, again on the S&P, buy. It's a buy on the Dow, buy on the Russell, another buy on the S&P, another buy on the Russell. There's a buy on the NQ. That's a buy on crude. And then as we roll into today, we had a buy on the S&P, and we've got a couple that haven't triggered. This hedge on the S&P worked out just fine. And then there's crude, and that worked out just fine as well. So that is Logic 247 you were just looking at. The weekly trading zones, we've published those since December 14th of 2009. They go out to our members every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone. They don't change throughout the week. We don't massage them or manipulate them. Wherever the market goes, and price, as you'll see on your trial, goes from zone to zone to zone to zone. Anytime you look at a chart, you can tell which zone price is currently trying to get to. The color-coded indicators help you to ensure that you're trading in the right direction, to the right zone, with the least amount of risk. And again, everything that we do, everything that we teach, all of our tools, fluid across all markets and all time frames. Now, because this is going on the internet, and because we've talked about trading, I am going to play the normal disclaimer that we play at the show, but don't go away because we're just getting started. In about 2 minutes, Michael's going to do the recap of everything that happened in the live training room. But to keep everything proper and official, before we turn off the TradingView part of the stream, please listen to this, but don't go away because we're not going away. Insert the awkward silence right here, please. Okay, thanks.
Inserted.
Thank you very much. I noticed some new icons. I think I must have got a Windows update overnight on the radio server. Those little icons look different.
I didn't get an update last night, but
Well, here's what's wrong right now. Let me fix that and that. I think we can remove the awkward silence now that I've pressed the right buttons.
okay.
All right, guys, listen to the disclaimer. We'll be right back. I'm still not hearing it.
No, neither am I. It was more awkward silence.
Pray hard and trade safe. Any financial information discussed on this show is simply...
Here it goes. Boy, I got more buttons. Listen up.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Okay, and that officially ends our Trading View portion of the programming. And to the Trading View audience, guys, as soon as we get everything worked out and squared away, you'll see us right back here. And in the meantime, feel free to catch us wherever we stream, which is pretty much all over the internet. So let me make sure I have closed that out properly. And I have. Okie doke. Very good. So, Michael, shall I send the charts over to you, or do you want to grab them?
Yeah,
or?
I'll just grab them.
Okay.
I'll just grab them. You know, today with the rate change, the markets just went nuts, and so I only put in 5 trades today. I'll go take a look at it in a minute here. So right now, what are you looking at? You're looking at my screens. Okay, that didn't seem like it was. Okay, that's good. I'm not going to go through every trade. I'll do every trade that I did, but I'm not going to go through every trade that's set up because the markets were just nuts, and it would take me like 2 hours to do that. So let's get over to here. Oh man, I don't even have it up. Hang on. Let me do this quickly. And then do this quickly. And then click on this. And I'll bring it over so you can see it. Okay. Now, if you have not taken a free trial with us and you want to take a free trial with us, go to the home page here at CFRN.net. Over here in the right-hand column, it says apply.cfrn.net. You can click on that, or click on free 5-day trial, or use proprietary indicators, and I think there's another one down lower. When you do that, you're going to be brought to this page, eminitrainingschool.com. On this page, there's a whole bunch of information you should read, and down here, all we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know you took the free trial. Now, this should be all loaded up, so I can scroll down to the bottom. And this spreadsheet goes back over 7 years now. Okay, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Now, today is the 3rd day. Diane, I don't know if you noticed, but you said it was the 9th day. But it's the 3rd day of March 2020. Today we made 15 ticks on crude and 26 ticks on the ES. Put us at plus 475 on the morning session. Today it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're up $125 a contract, and we took a total of 5 trades. Now, there were probably hundreds of trades available today on the 4 markets. So I'm not going to go through all that with you. I'm just going to go through the trades that we actually took, and whatever I outlined, I will go through. Okay, so we were up on the month now. We're up $735. That's over 2 days, averaging $367 a day. On the year, $7,687. That's over 38 days, averaging $202 per day. Okay, now I'm going to back this out because there is so much data. And the last time I scrolled back, it locked up my charts, and I had to restart it. I had to restart DT Pro. But let's just go back and look. Now, I had drawn this trend line on a larger time frame, and I said I think it's going to try to get back up there. Yeah, so many trades. But here's what we did and what I outlined. Okay, it's taking me like 5 minutes just to scroll back to the beginning of the day. On gold, we didn't take any trades today, but there were trades available. There was one right there, right at the very beginning, then another one there, and you know, all the way up. If you watch the slingshot, that's what I was telling everybody to do this morning. Watch the slingshot. Because, if the slingshot's setting up, then you're probably going to get a trade set up. And, there were a bunch of them right here on the way down. You see how the slingshot set it all up? There are a bunch of trade opportunities in there. There's one long opportunity right there. Let's see. Shorting opportunity in here, shorting opportunity here. Just watch the slingshot, okay? Because that's what's telling you what's going on. No. Yeah, it was just insanity today. Right there. Right there. Right there. Right there. Right there. Right in here. Right there. 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 It's just all over the place. Now, I didn't trade gold today, so yeah. And it just kept going and going and going and going. Look at the slingshot. You see down here, all these pullbacks are trade opportunities. You see that? The slingshot was telling the story today. Price was jumping all over the place, and it was hard to do anything with price. But the slingshot was telling the story. And it did on all the markets. I didn't do anything with the euro either. So I'm going to be quick with that one. And come on, euro. There we go. Yeah, see. Now, I know we had news come out at 10 o'clock, but I think that's when the rate cut came. It was right at 10 o'clock, I think. Because the news that we had was low impact news. And it was worse than expected. But all the markets liked the rate cut. And so we had a bump there. Now, again, look at the slingshot. You got to follow the slingshot. Okay. There. 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 Okay, on days like today, I mean, there's times where you just shouldn't trade, and today was one of those days where, if you got your goal for the day, it was really good to put the mouse away and just walk away from your computer. I mean, it was fun to watch, but, the temptation to jump into some of this was incredible, and I didn't. Well, and I mean, you see how much the euro gave today. It gave a whole bunch of opportunities. Now, in Crude, I did actually do a couple of trades. Okay, so I will show you them. And hold on a minute. This one right here, we picked up 15 ticks. And look at this right in here. See, just follow the slingshot. So many opportunities. This was a break even. That's what I did on Crude today. I got 15 ticks. I had one break even and one plus 15. But there was a ton of opportunity. Now, on days like today and yesterday, for that matter, it would be best for you to just trade one market. Crude is my favorite. Though I did better on the ES, Crude is my favorite. It would be best for you to trade just one market. Okay, not try to look at all four like I was trying to do today. And and normally I don't have a problem doing it. But when the rate cut came in, and it was not, see, in here, it doesn't say anything about a rate cut coming or a rate decision or anything. And that's today, March 3rd. Anyway, on the ES, you keep scrolling back. See right here, 10:03. Just insanity. Okay, here, let's start going in the right direction here. Hang on, let me pause there. Okay, so we started out at a weekly trading zone. Then it started to tank, and again, watch the slingshot. Now, where were the opportunities? When you had to pull away. When you had to pull away, right there. And there. And there. And on this first trade here, we picked up 10 ticks on the ES. That was where we got the goal for the day. And so that was after 7 minutes. And got to watch the slingshot. Okay. And, you know, when the markets get crazy like that, it's tough. We had a break even right there. We had a +4 there. I guess we had 4 trades on the ES. And a +12 right here. Yeah, so we did have 4 trades on the ES. I got to fix that in the spreadsheet. +12 there. Then I missed a couple of trades, but at that point, I was pretty much, you know, using the small time frame that I work in. The markets were all over the place. The slingshot wasn't giving anything up. So I pretty much just put my mouse away and watched. Okay. Now, in here, again, you have to just look at the slingshot and see where there were opportunities. Okay, but it was moving around so fast in a 4-tick range. I actually flipped to a 5-minute on 2 charts today. That's why you saw those other trend lines. Let's see, right in there. And, you know, I'm just going to skip through all this. I mean, you basically know. Right here, you would have just had a short right there. Okay. There were so many opportunities, but on days like today, where stuff just goes crazy on you, pick a market and focus on one market. Now, any of these markets, any one of the 4 would have been great. I mean, right now there's a long on the euro. There was just a short back here on the ES. There's a short here on gold. There's a short here on crude. So, you know, any one of the markets, just pick it and focus on it. Okay. Now, that said, I am going to go back here and I have to change the number of trades to 6. All right, so today, sorry, I'm making all this noise. Today, as I said, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today's the 3rd day of March 2020. We picked up 15 ticks on crude and 26 ticks on the ES. Put us at +475 per contract this morning. It took 7 minutes and 1 trade to get to the goal for the day, and we took a total of 6 trades On the month now, we're up $735. That's over 2 days, averaging $367 a day. On the year, we're at $7,687. That's over 38 days, averaging $202 per day. Again, that is one contract, 2 hours per day. Now, if you have not taken a free trial, you just need to go here to eminitrainingschool.com and scroll down to where it says 1 week free trial. Put in your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't hit that, we don't know that you took the free trial. And that's it. So with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. My stomach is ready. Okay. Well, while yeah, you did. That's okay. But I was just going to say, out of the trades that I just mentioned, this one was profitable. This one is profitable right now. This one was profitable. And this one, where the heck was it? Oh, right here. It was profitable. So the trades are there. But again, I think you should focus on one market. Pick a market. Probably not the ES, because I'll show you this again. We're running at about 1/10 of the normal liquidity. And oh, here. So yeah. Yeah. So we'll probably match up to yesterday, I imagine, today. But the liquidities, I mean, there's a ton of volume. I mean, there's enough volume, but no, it's just wrong. This is just wrong. Yeah, you can grab the charts if you want. Okay.
And I just reopened audio on the YouTube. Well, that'll create a glitch. Oh well. Anyway. Once you get the green light to go live, it's with one contract. The goal then becomes to increase your account balance by $2,000 with one contract. Once you do that, the blueprint gives you the green light to add a second contract. That's $200 a day instead of $100. You just doubled your rate of pay if that's your goal. Lots of folks out there who trade the S&P have a 2-point goal. You see it everywhere you go. Everybody agrees it's a very clever idea because as you increase the number of contracts you trade at just 10 contracts with $500 intraday margin, it's $5,000. 2 points is $1,000 a day. And for most folks, that's a good income. So we are firm believers in aggressive risk management. In our live trading room every day, you'll see Michael with our set of rules. That's our core methodology. Okay? The rules are carved in stone. There's no maybe this or maybe I'm going to try that. No. It is a mechanical methodology based off of our strategy. Once you learn the methodology as it's taught in the live training room, then I can work with you in one-on-one mentoring sessions to help you embrace the bigger picture. Because price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern, price is on the move. Yes, sometimes it moves sideways, but nonetheless, it's on the move. Now, the weekly trading zones go out to the partners every Monday morning, 6:15 a.m. Eastern. And I do generally share them with the entire audience every Thursday. Today's only Tuesday, but it's kind of a big day with this surprise, or not so surprising, rate increase. I think a lot of the street did expect it. This week we have a weekly trading zone at 30.33/34. And again, these numbers go to the members Monday morning, 6:15 a.m. Eastern, and they have since December 14th of 2009. So there's 30.34. Now let's get a 30.33. All right. So price has dropped below the weekly trading zone. Now, when price approaches a zone from above, we expect it to be good support until it isn't. And it was. Look at the bounce it gave us from 34 up to 81. Almost a 50-point bounce. Again, these are unusual times. This is unusual volatility. The markets unfold the same way. I mean, how markets work is how markets work. Even when there's incredible fuel thrown on the fire, as we had today with this rate cut, the market still works the same. But moves are exaggerated to a great degree in either direction. That's why you either have to greatly increase the risk or be patient and wait for the markets to settle down. To give you an idea just how much volatility we're talking about, because of scaling, this chart might just look, well, that just looks like the same old 30-minute chart you always put up. It is. The difference is in the size of these candles, even the little ones. Hang on, let me show you. Okay. Let me get that moved out of the way. Okay, come on. This is the one I'm looking for. This is the ATR, average true range. Okay. Now, we're on a 30-minute chart. If I double click this and open up the properties. Now this ATR, this is just something I show you to help you understand, what current volatility is. It's not one of our, or it's not part of our indicator set. Following? It's just standard on the platform, but it gives you an idea. And if you you've probably used some methodology or strategy over the years where they give you a formula to set your stop loss based on the ATR. So if you scroll down, you'll see that this is set to 21. The default is 14 on every platform I've ever looked at. It's always been 14. Okay. Now, that's not a lot of candles to gauge on. You could put any number in you want. You can have it look at the last 100 candles. There, you want to do that. We'll have a look at the last 100 candles. What it's now telling us over the last 100 30-minute candles, that'd be 150 hours of trading, yeah? The average range of a 30-minute candle from the low to the high, from the high to the low. If you went in and did the math on every one of those, added it up and divided it by 100, which is the number we just told it to look at the last 100 candles. The average candle, 30-minute candle, 26.5 points. Just this candle here. The high is 30.48. There's 30.28 at the bottom of the body. That's 20 S&P points in that candle. At $50 a point, that's $1,000 per contract traded. That's how big it is. Okay, so if you need help setting up this average true range, if you want to use it, especially in these volatile times, you can book a mentoring session. I'll be happy to help you get it running. Every platform has it in some form or another. Let me just pull all this back down. All right, so we covered the Concierge Trade Alert for the S&P. Let's run through the others real quick, and then we'll go to our good word for the day. Get all these things closed back down. Come on. Not closing. All right, so we're good on the S&P. Let's go to the Dow. And the Dow, we said consider being short. 25,800. Now that one hasn't happened. The long side has. The long side for the Dow, 26,740. And that happened. That's a semi-straight line. 26,740. So you get the idea. Now from 740, what do we put at a high at? 86. So that's that little wick there is 46 points. at $5 a point, it's $200 per contract traded. Okay? That's how exaggerated the market. Every one of these, you know, looks like a tiny move, but if you do the math, you just be careful out there. Remember Hill Street Blues? That was a great TV show, right? That's what the guy said every morning after roll call. Be careful out there. Okay. So we're on the Dow. And the short side I said was 25,800. So I just need to kind of straighten that up. That's better. Not quite. Right? Yeah, there it goes. All right, Russell. Last night's alert on the Russell, instead of being a long 1524. And see if we'll find that right about here. First time price walked up, took a good look, backed off, came back to the BBC, leg, retracement, leg right to the trigger, retracement, and then, of course, the Fed news took us up and through the target. Short side for the Russell is 1476. In Q, long side 8907. Right there. See, price chomping at the bit, trying to knock down the gate, finally pushed through. And where did it go? From 8907 up to 9005. No, the high was 02. You can do the math. On the short side, 8556. I want to jot that down. It's possible we see it this afternoon as we head into the close. 8556. There we go. Okay. And on crude oil, we'll get these fibs out of the way. The word was consider being a long of 48.20. Which is right about there. Okay, this first move took us up to 55. So from 20 to 55, that's a $350 per contract move. There's a $400 per contract move, another $400 per contract move. Important prices, important areas are almost always tested. Crude is doing a better job today of being more of an ordinary, plain vanilla kind of a market than what we're seeing in the indices. Okay, so if you're going to trade something, this is a little closer to a normal, typical market. Bullish cross, price pulls away, price pulls back, up close, higher prices. We have what looks like on this 30-minute chart a triple top going on here with gold. I'm sorry, with crude. We've got our bearish cross, right? In fact, we already had a leg. We already had a retracement to the tick, to the BBC. And where should you look to find support? My first spot. Be right there where we have that bullish cross. Okay, so if you're short, consider this area. as a potential target. Now, the short trigger on crude was 45.25. It's way down here. Don't think we'll see it during the remainder of this session. And of course, the new Concierge Trade Alerts will be out shortly after the Globex Open tonight. And the alert for gold that went out last night. Considering long 1606. There we are, 1606 to 16. Well, we'll just round it down to 46. It's a 40-point move, $100 per point, $4,000 per contract traded. Okay. Based on just this last leg up right here. The shallowest Fibonacci retracement is right here, the 24. If I put my indicators on. The BBC is way down at the 62. I'm going to suggest that these two will meet up somewhere here in the middle. And when they do, that will be our heads up to get along the market. Again, if you want to take our free trial, there's no credit card required. Gives you access to the live training room each and every day. 2 hours, Monday through Friday. Full use of the indicator set. The Logic 247 alerts, the Concierge Trade Alerts. All that and more. You can even book a complimentary one-on-one mentoring session. If you got questions about trading, you've always wanted to ask somebody and you didn't know who to ask, you can ask us. You can book a session with myself, you can book a session with Michael. In the training room, you'll get to understand the core methodology. Everything that we do is based around that. That's the building block. Those are the building blocks that you learn there. Okay. Emini Trading School.com. That's where the journey begins. Emini Trading School.com. All right. Good word for the day. Exodus 15:26 says, I am the Lord who heals you. The full scripture. He said, if you listen carefully to the Lord your God and do what is right in his eyes, if you pay attention to his commands and keep all his decrees, I will not bring on you any of the diseases I brought on the Egyptians, for I am the Lord who heals you. Now, hopefully you're not sick, but I'm sure you have been at some point in your life. You may have someone in your life right now that's sick. Let us all pray for them, that they should be healed. Why isn't every sick person who is prayed over healed, right? I mean, this prayer stuff can move mountains, right? So don't dodge that question. It's a normal, natural question for any believer to have. This is what I was taught. I prayed for my loved one, and they didn't recover. They're not feeling better. It doesn't make you bad. It doesn't mean you have no faith. It just means you're human. Welcome to the human race. Now, why isn't every sick person that you pray for healed? We don't know, and God doesn't tell us. And that's the truth about faith. We know that doubt and unbelief can hinder his miracle-working power in our lives. When Jesus returned to his hometown, to those who knew him best, we read in Matthew 13:58, he did not do many miracles there because of their lack of faith. But there are aspects of healing we will never fully understand. Paul writes in 2 Timothy, I left Trophimus sick in Miletus. Why would Paul, who raised the dead, leave a friend sick instead of praying and seeing him healed? Well, there are many things about God we don't know. But here's one thing we do know. He said, I am the Lord who heals you. And since he said in Malachi 3:6, I am the Lord and I do not change. And Jesus Christ is the same yesterday and today and forever. Hebrews 13:8. We can go to him for healing based on his word. One of the last statements Jesus made before leaving earth was this: these signs will follow those who believe. They will lay hands on the sick and they will recover. That's Mark 16, 17 and 18. So the question that every believer has to deal with when it comes to this topic: do you believe that God still heals people today? If you do, then obey this scripture from James 5:14 and 15. Scripture asks a question: is anyone among you sick? If so, let him call for the elders of the church and let them pray over him, anointing him with oil in the name of the Lord. And the prayer of faith will save the sick, and the Lord will raise him up. So, the good word for today is don't give up. Believe God for your healing, the healing of your loved ones, and the healing of this world in which we live. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.